Hello everyone, Charlie here, and in this presentation I'm going to cover double top and double bottom patterns in the pure price action presentation series. As always, we must start with a disclaimer. Feel free to pause the video and read through the entire disclaimer. But when trading any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. The double top and double bottom patterns produce an approximate 75% win rate. This pattern is one of the most common price reversal patterns. The double top pattern is defined by two almost equal highs, and a double bottom pattern is defined by two almost equal lows, both with space in between. The double top pattern is complete when price breaks below the previous swing low of the first high and is considered successful when price moves at least the same distance of the previous swing low. The double bottom pattern is complete when price breaks above the previous swing high of the first low and is considered successful when price moves at least the same distance of the previous swing high. Pending orders. When you recognize double top or bottom pattern, you can either A, enter at market price once that breakout occurs, or B, set a pending order. The pending order you would want to set would be just above the previous swing high for a double bottom pattern, or just below the previous swing low for a double top pattern. In this example to the right, you see a double top pattern. This second trend line is the previous swing low, and the pending order would be set just below for a short position. So here's your first trend line, here's your second, and right here's where you'd set your pending. Okay, so just slightly below that. And that's for a double top. For a double bottom, you'd set it just slightly above. Okay, so trail stopping and risk to reward. After you've decided whether you'll be entering a market price or setting pending orders, you must have a trading plan in place for take profit levels and solid risk management. In this example, you see a double top pattern. The lines represent TP or take profit levels for multiple positions. They are 1 to 1, 2 to 1, 3 to 1, and a fourth position of 3 to 1 with a trail stop. Okay, so here's your double top pattern. Here's that third trend line, so here's where it broke below. You want to wait for that candle body to break, okay? Otherwise, sometimes you can get a fake out. So, once that breaks below, you may see some consolidation like you do here, just for a few hours, not that long. If you're doing a daily chart, you may see it for a few days, okay? Even longer. It just depends what type of trader you are. But either way, in this example, this is an hourly chart. And we see a little consolidation once it breaks. And right here to here, that's our take profit 1. From here to here is 2. From here to here is 3. And we still have a fourth position, okay, that you would want to trail stop. If you're not familiar with trail stopping, we do offer free lessons over at Slick Trade so that you can get a good idea of not only trail stopping, but also just risk to reward in general. Okay, it's very, very important as a trader. No matter what strategy you have, or what type of trader you are, or any of that, if you do not have a proper trading plan, use solid risk to reward and follow your plan, whatever it is, you're not going to be successful, at least not consistently. Okay, so this is the plan I usually stick with. And it depends on the strategy. Each one is a bit different. But either way, I stick to my plan no matter what. Okay? You will experience losses, and you will experience wins. But if you have a good strategy, you have a good plan, that's what's going to make you successful. So, I'd like to show a couple examples here from the chapter I wrote. Now the first is this double top. I just want to take a second to show you guys, okay? So, with this double top, what we mean by that is, and a lot of people will call this the M and W. I've heard it called many different things, and I honestly don't know what the proper one is. I just know that I really like it, and when I see it happening, I always set up to either continue to watch it or set a pending order or whatever, depending on what my schedule is like. But the M, what they mean by the M is right here. You have an M that forms, okay? In a double bottom, you have a W that forms, which is right here. You see that? Real clear W. Now, these indicators that are on the charts, you don't have to have them on there. If you do sign up for that Pure Price Action series, the free series, you will get access to this template, and it does help you to see kind of that M and W and other patterns as well. Okay, this is just one of my favorites. It's very consistent. So, either way, we've got this first top right here, your high. The price comes down a little bit, starts to form that M, comes back up right around that same high. It's not exact, okay, but you're going to see that, you know, that pattern, the M pattern, basically. And then price starts to come back down, okay? Now, right here is that swing low, and once price breaks that swing low over here, which was on this candle, that black candle right there, that's where you'd enter that trade, okay? So you want to wait for that. Don't enter when it's up here or when it's here, because it could be a fake out. You could be having, it could just be price continuation, okay, not even a fake out. It could just be a continuation pattern, you know, those happen a lot, especially when the market is trending, okay, and this is a reversal pattern, so keep that in mind. Stick to that plan, okay, and wait till all the rules are fulfilled before you enter, okay. Same with here, okay. We have our downtrend happening here. We have our first low, and then we come up here. Here's your swing high, okay, it's making that W. Comes back down, right around the same low, and then starts to head up. And you want to wait. You want to wait till price breaks. And I really, if I'm not going to be at the computer, I'll do the pending order. But if I'm going to be around, then I wait until this candle is fulfilled 100%. Okay, sometimes you'll miss out on pips, but if it happens to be a fake out or a continuation pattern or consolidation, you're not going to, you won't enter that trade, okay? So you want to see this body break above, okay? For the most successful trades, I guess, or the, you know, making sure that that's what this pattern is, okay? And then here we go, you had your reversal, okay? Now, we already saw these. Here are some examples. I'd just like to explain them. I know you have them in the chapter. But right here, you see this? Price comes down, goes up, comes down, and then you're like, oh, hey, there's that clear W, there's that double bottom. Okay, and you enter here, or you enter here, and you're like, yep, it is happening. It did not break above that swing high, which was here. It was a continuation pattern. Okay, so it went back below this low here. So, at this point, if you're familiar with continuation patterns, you would have entered a short. If not, if you just know this pattern, then you just would have avoided it and waited till the next one. There's nothing wrong with waiting till the next one. Okay? It's important to be very patient as a trader. Here is a double top. or the possibility of a double top, okay? So here, price is coming up. We have our first high, comes down, we got our swing low. Here we go. Look, it's forming that M pattern. Oh, but it does not break that previous low. We've got another continuation pattern. And you see, if you would have entered here, or here, wherever, price didn't come back down until, gosh, a year later. This is a daily chart, okay? And even then, depending on when you got in, you might not have broke even, okay? And you could have been completely, you could have wiped your account at this point, depending how risky of a trader you are. Okay, that's a lot of pips there. Okay, just keep that in mind. Stick to those rules. Right here, again, possible double top happening. Price come up. It's kind of here's our high, comes on down, and then heads back up. So here's our swing low. Comes back up right around that same high, and look, oh, candle broke. Beautiful, beautiful entry. If you got in on that, again, looking at a daily chart, you could have gained a great number of pips. Okay. And here's another example of a double bottom. Price is coming down. We have our low, comes up to swing high, comes back down around the same low. It's a little bit off on this one, but if you have this this template, then you can still easily see that W that's happening. That's why I highly suggest downloading that free series. You don't have to be a member for that at all, just a free member. So here we have this. Right here, almost broke. Next candle broke. Okay, had a little bit of a price coming back down. You could have got a better entry. This is a daily chart as well. Okay, so you had, after this actually broke, you had 1, 2, 3, 4, really 5, 6. You had like about a week to get in on this trade. Even longer if you look at that, what your first entry would have been. You have this whole time frame right here. Okay, and then price continued up. So I hope that this presentation has helped you. If you have any questions, feel free to reach out. Send in a support ticket. We have a very friendly support staff, and our goal at Slick Trade is for people to learn how to trade, okay, and for you to be successful. So hopefully this has helped, and I hope you've enjoyed the presentation. I will talk to you guys later.